All right, all right. Good morning, traders. Good morning, good morning. Good to see everybody. Happy Sunday. Hope your weekend's going well. I got one last day. Yeah, happy St. Patty's Day. That's right. Top of the morning to you. Hope you have some green beer planned to be drunk and some corned beef and cabbage. I think I'm going to my sister's actually. She may have some St. Patty's Day theme. All right. Good morning, Michael. Good to see you. Good morning, Perry. Hi, as always, Sandy. And right back at you, Robert. Okay, good. welcome to the Market Watch Group Weekly Market Prep. Always my favorite day. I got a fresh cup of coffee, a little bit of sun coming in. Expecting mid 50s today. Spring is coming. Very happy. Let's get to it. Here's the disclaimers. As always, education, illustration. We are not brokers. We are not advisors. We don't give advice. We don't give guidance. Yada, yada. What are we doing today? Market posture. We will posture this market with an expectation of a regression. Yeah. Which is fine. I'm not concerned about that, but we do, I think, expect some level of regression. Did anybody score theirs? I think actually, let me check my Discord because I saw that there was a message, but I didn't. I had a forced restart. God, I hate those things. I had a forced restart, and so okay, there we go. I got Sandy. She put hers in. It looks like Steven did as well. Six. Okay, awesome. Thank you both. Thank you both. I love that. We will posture. We will look at the calendar. Make sure we understand what news is coming out. We know it's a big one this week with not a lot of expectations from the actual action being taken. The action being taken, we expect nothing. We expect the market expects there's basically no likelihood that they raise rates. This is what I'm talking about, the Fed, obviously, on Wednesday. What there is a potential for is verbiage. Do they change their verbiage? Do they, move the bar a little bit as to what it is they're looking for? What they are they putting some kind of a expectation on it? That's what we start doing is we start watching the verbiage. We know very clearly where we are, and that is employment, GDP, sales, all staying strong. And that makes it hard. Sales staying strong makes it hard for inflation to continue coming down. And we seem to have found a little bit of a stall in the inflation. And so that's concerning, right? That's what we're watching there. We'll look at sector searching. I think we probably should run a couple searches if we get through it. So I'm going to go fairly quickly today and not I want to crank through it so we have a little more time to search. We'll do some watch list maintenance. Nothing to get rid of. I think I got rid of one thing last week. I can't remember what it was. I want to say it was a financial. Maybe it was BX. Like it was just drop below its 15. It's just like, you know what? But for the most part, everything has stayed pretty strong. We'll look at this week's early week short list of candidates. On Friday when we went through, it was a pretty vast list. I mean, it was pretty strong. A lot of things in there. There was tech, there was financials, there was industrials, and then it repeated. There was some consumer or communication services. Don't really. I'm just scanning my note card. I don't really see consumer discretionary, with Walmart being considered more consumer staples. Okay, let's get to it. Let's get to work. Let's see what I need here. I need a chart. Working title for another trading book. I just like writing titles. I don't really like writing books. Chart and a chair. That's I tell people all I need to trade is a chart and a chair. Um okay, we have a chart. Let's get to it. SPY. And yeah, if you're a poker player, I'm kind of stealing that from poker where they say all you need is a chip and a chair. I stole that for sure, but I took it and made it chart. That's mine. SPY. Okay. Let's scale out first because this one is one where we think there could be some concern. Is there concern on the long term? Not at all. For me, not 100%, not at all. I mean, it's there. You can see there's a little bit of a pause here. And sometimes a little pause could look like this. This is a little pause. And what did it do? It paused and then it went up. Pause up, pause up. This is the little pause. And this one dropped a little bit, started to go, and then it had this. So this right here, let me get my drawing tools ready. This right here is what scares people. They're like, oh, it's coming. You'll notice that even that didn't just come. We had this first, right? We already had something that showed up. Remember, that's 3 weeks worth of regressing price action. Then we got 2 weeks up, well, 1 week stable, 1 week up, and then we got, that 2-month period. Even that didn't just come out of nowhere. Something like that would look like this, where it drops and then it comes up and it can't get as far, and then it drops some more. Remember we see that higher, lower high. We see that. That's what we watch for, right? Now, there are some times, I'm going back over a year, where we have a couple of pauses like this, and then it gets a little bit worse and it comes down, right? Okay. Could that happen now? Yeah, sure could. That's a little bit worse than this, but not much. Actually, I'd probably say they're very close to the same thing, 3-4 weeks. So is there a possibility of that right now? I would say yeah, but I'm not like, oh, that's what I'm expecting to happen. Okay, so, but remember that what we're doing here is scoring the trend. Is there any change in the trend? We had increased strength, unexpectedly increased strength. It broke out of what we thought might be the next trend. So here, what we're watching for is, does it pull back only to this point? Because if so, we start thinking about, how do I redraw my lines? And I might start thinking, well, do I need to draw my line like this now? And you'll notice that's back like it was here, and maybe even a little steeper. So if all of a sudden we're thinking, hey, this thing is that's an extremely strong trend score right there. Extremely strong. For me, I got no change. Everything looks fine here. Everything looks fine here. Oh, Stephen, remember the priority. The priority is the alerts. I unfortunately, but it's all coming. What did I just do? Did I change the formula? He's giving up. Don't give up on me, Stephen. Don't you give up on me. We're in this together, you and I. And we will accomplish it together. And when we do, we will raise our hands in victory as a team. You hold for that. Okay. Patience is a virtue, Stephen, and I'm testing it. I'm testing that saying. 1.5 looks good to me. I'm good with a 1.5. Let me know if you changed yours or if yours is different. If you think I'm just simply wrong. This is where I'm like, okay, what are we going to do with this? First of all, what we're going to do, I wish it would just, I want my vol smaller. I want my stow smaller and I want my volume smaller. Get it down. I want price is the star of the show. I prefer price. We'll give these guys a little bit more room. Okay. Volume went to minus. Okay, you hit it hard. I'm iffy on this first one. Definitely the second one. Definitely the second one. But let's start here. Volume, we were in this trend for so long. In this trend for so long. I'm gonna take a quarter point. Because here's the thing, it's not just, yes, I'm looking at the fact that we popped down below this, but you'll notice that we've really just sort of veered a little bit off of the trend's path before that. And so I don't know, but I'm gonna go ahead and just give it broke it. We're gonna knock a quarter point off. And here's where, we worked and then we found ourselves in a trend. And when we had that trend, that score was just pretty stable. But now that we broke, we don't go, oh, it seems to have broken the downside of our trend. So now we're a -1. Of course, that's not what we do, right? That's not a minus. There's nothing minus about that. We deduct to illustrate less strength, less momentum. It's eased. We're like, what happened? So I knocked mine down quarter of a point. I'm at a 175 now. Okay. Volume. Remember, we're taking our chart to a 1 month daily. Yes, Graylin. Right? We're all we're doing is identifying and measuring trend. We don't care if it's at the bottom of the trend or the top of the trend. That's not for measuring and identifying posture, or for measuring and identifying our market posture. Market posture is our overarching perspective of the market that sets the tone for the week. And then day to day, we focus on our trading posture, market posture, which informs the trading posture, the day to day. The day to day, 100% we're concerned about, are we at support or are we at resistance? And what is the momentum showing us? So here we want to see the bigger picture, and then we focus on the granular more day to day when we say, now we're in the weeds. We've got to see it, right? And so what I'm doing, if long term is okay, why is short term changed? Which is exactly what we would expect, right? My short term could theoretically be negative with my long term still positive. How would that happen, Scott? Let me show you. Okay. So for example, if this were to come back from here to here, that is in this trend. That's in these red lines, right? That trend is holding up. But that would put us pulling back to 490. 490, that's 20 points. Or I mean 30 points. 30 points is a deep consolidate. It's not a correction, but it's a deep consolidation. So that puts us like maybe even 485, right? That's let's see. Yeah, 485. Okay, so now if we go back, so the entire time as this fell, my long-term score would not change because those red lines represent 1.5. That's the trend score. But if I now take this back to daily, and let me zoom back out to 6 month daily, and 485, that's down here. So if we went like this, and then like this, and then like this, our score is going to be like, whoa, what's happening here? It's going to revert. It may not go negative yet, because remember, we're always a little bit more inclined towards bullishness because the markets inherently are more inclined towards bullishness. But yeah, our score is going to revert. Like, and at this point, it would be negative right there. If there was anything we were looking to do right there, it would be buy a put or nothing at all at this point, right? Because your short term is now doing this, but that is just simply a pullback in the long term. So that's where, when you're kind of zooming in and out, you got to be really careful. If we zoom too fast or too frequently, we find like our perspectives start to confuse. Oh, sorry, hold on. My microphone. Okay. How's this sound? I think it switched to a bad mic and then back to the good mic. So, okay. Does that make sense? Let me know if you have any other questions. But yeah, they certainly, so this could slow up if this trend starts to go like this, which I would expect that to happen more like in the summer. I still think we've got bullishness ahead of us. The cyclical is in a good place for it. But if that happens, our short-term trend score is 0, but our long-term would still be okay. It would still be bullish, right? So those two definitely can be different at different times. Thinkorswim question: how do you have your chart present with blank space? Oh, and you got to have that blank space. So I will pause for a second. If you go into this is your settings. This little cog brings up your Thinkorswim settings. And there's a lot of different things you can do to really like customize the way things look. But if you look here, you have time axis in here, and then you have expansion area. I put mine at 20. Some people go more. You could get a little ridiculous with it. I want to see about a month. So, you know, and that gives you this blank space out here to the right. Okay, so where are we? Volume is where we are. Sorry, volume. Back to volume. I'm still on a good pace. Don't worry. I'm going to keep going pretty quickly. Volume. Okay. This one I expected to drop, but we'll see. We'll see. I've got these 2 days here. Was this a volume day? No. We said this was not, but it was a good day, but it wasn't a 5% day. I believe this was a 5% day. 66, yeah, that's a 5% day. So there was a day, yeah, there's some fighting going on, right? That was a day there. That was a day there. These were both days, but we'll see if we think. Okay. I actually already looked, and I didn't think that this was enough. I didn't think this was a big enough drop, and that a good chunk of that volume was the shadow, meaning the buyers pushed it back up. So I'm going to give that a tie, and I'm not going to count that one. If you do, you might have a different score than me. I'm going to say these are buyers, and buyers. It's a little hard to see because there's so many little boxes, but I'm going to put my lines in and it'll make more sense. This is a sellers. This is a sellers. This is a sellers. Okay. I've got 3 and 3. 3 and 3. Tie goes to the buyers. So I'm still going to give this a 0.25. That's how I'm going to score this. Now, my final test is when I have this whole area like we have here, what was the net result? Michael said 3x4 sell. So he's likely saying this one was enough. Judgment call. For me, the drop from the bottom of the candle before it. Remember that this is where we closed the day before. This is where we closed the next day. So I feel like it wasn't enough to say, oh, the seller's got a smash and grab day. That's what we're saying with these days, right? We're saying, now the next day they clearly did. The next day it went from here to here. That's a much more substantial, right? That's why I discounted it. So I'm at 3 and 3. Now the last thing is, where were we to start? I'm going to switch the color of this to illustrate this a little better. Where were we to start this little tug of war? Well, we're back here. So this was the starting point of the tug of war. And at the end of it, I say I'm a 0.25, which means I think the buyers are still slightly in control. Where did we end up? Slightly higher, right? Now, if I said, if you said my score is a minus score, what I would point out to you is if the sellers finished that little battle, and it was a battle, with all those red lines, you can see if the sellers finish that battle in control, why are we slightly higher at the end of the time frame? That's so it is a volume check, but that's just kind of like a final check and balance, right? Just a discount double check, if you will, that makes sure that we're like, yeah. So when I finish this and I say, okay, I'm still giving this to the buyers barely, they're getting the tie goes to the buyer winner rule. But when I look and I say, well, when I started this thing to when I've ended this thing, it is still slightly in an advanced position, then I'm going to think, yep, I'm okay with that. That's how I finish. So, all right. Let's back this back out. And we are going to score this. Oh, okay. It wasn't a drop. I thought it might drop. If you went to a 3-4, then you would probably end up at a 0. Maybe a minus. I don't know, Michael. Did you end up 0 or minus? If you ended up at 0 and you have that slightly higher for the buyers, 100% I agree with that. If you're a negative, that's where I'd be like, I can't see it being negative because we're slightly higher. So for me, 0.25, that's where I would see this. It's tough to give that to the sellers with it not having declined. But there you go. That's how I see it. All right. Major market. Let's go see what we have here. Where? There we go. Okay, major market. Dow, NASDAQ, Russell, S&P. What is it that we're looking for here? Remember that the primary focus is small caps. Small caps are the ones who are most susceptible to interest rate whipsaws as they speculate what the Fed is going to do next. And they say, oh, it looks great. It's going to be interest rate cuts all around. Everybody gets an interest rate cut. It's amazing. Small caps rallied. Then they're like, oh, wait a second. Then you hear some people are like, nobody gets an interest rate. No cuts for you. I think we're somewhere in the middle. I really feel like most in this group have been in the June, July camp. I was probably like more aggressive. I'm like, May. Maybe it's going to come in May. I'm in the June, July camp. But that whole discussion is going to impact small caps more than anybody, right? They rely on cheap money more than anybody else. So that's what we're looking for. So what's going on there? And you can see even now, right? We have the NASDAQ on the top, S&P in the middle as expected. And then here we have this little, lagging position fight right now, back and forth between the Russell and the Dow. And you can see they're around the same place, but look at how they get there. The Dow's just kind of like the tortoise, just like dun, 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 and the small cap sprints and gets tired, and then he sprints again, and then he gets tired, and he sprints and tired. It's all over. There's a lot of volatility to end up at exactly the same place. It's very interesting right now. CPI and PPI data this past week hit the Russell. Not that much press, right? Like it wasn't. I mean, look at it. Yes, a little bit, but everything got hit a little bit sideways. This one was a little bit more down. So yes, a little bit, but it held up remarkably well, I would say. Still demonstrating an overall pervasive bullishness that I think is important to note as a characteristic of the market. Okay, so let's zoom in now and see what comes next. Okay. Same battle. Similar, but you can see here the Russell's a little bit more lagging, where this is one of the things that's had us hesitant to give major market the strongest score it can get. Some of us hesitated. Still, they're both just kind of in this lagging position. What we're looking for out of the Russell is, can it move into a leading position? That's the final piece from this component of our market evaluation, is, do we have both the NASDAQ and the Russell in a leading position? Because what does that mean to us? It means that the market's appetite for risk is full speed ahead, all full steam ahead, right? All gears are turning, everything's running. That's what we're looking for. But it's been a little bit iffy with the small caps, and you can see just how much they're just a lot of reaction to what's going on within interest rate discussions. Let's go to 66 days. But now at our decision point, you can see in December, and admittedly, December is where it really got a bit overblown, right? It went way too far, way too fast, and then gave almost all of it back, but not all of it. And that was what we were looking for. And when it didn't give it all back, we're like, wait, still okay. And that's where we are now. In this position here, I do think it's in a lead, right? It is leading. You can see that the Dow has really sort of, the Dow is in a strong place, but I always felt like it was bullishness, not defensiveness, right? It was a all boats rise with the tide type of a bullishness. Because one of the things we're looking for in this analysis is, do we ever see the Dow surge with the Russell and or the NASDAQ regressing? So if we ever see a crisscross, I'm gonna play with some colors here. If we ever see a crisscross where this line all of a sudden shoots up, I'm gonna go NASDAQ only. Let me go red. And the red line comes down. If we see that type of a cross right there in this analysis, sorry, this is no, I'm wrong. I all of a sudden got confused with my sectors. I'm thinking major market. No, even still, it would not be the green line. Sorry. Let me start over. It would not be the blue line. It would be the green line. I lost my train of thought when I was changing colors. If the green line shoots up and then we see the red line pull back, that's something that we would actually, if we weren't already in a hedge, that would trigger a hedge. That type of defensiveness. We've seen that, not we as a group, we as a market, collectively have seen that type of a situation before. There's actually been a time where that signal showed up for me, but nothing else. No VIX, right? It just sort of was real sneaky. The market, the real sneaky, but we're looking for that. So, Russell and NASDAQ have been leading past 6 weeks. I have the major markets very strong, held a score of 1. Okay. Okay. You're joining Sandy. Sandy's a 1. I am probably still going to keep mine at. I do have strength here. It's a little bit not quite where I want it. I would rather see the S&P where the Russell is and the Russell where the S&P is, and then I'll be like, okay, I'll give it a 1. So I'm going to be a little bit more of a stickler. This looks fine. This looks just fine. So a little weird with the S&P in the front, but everything's kind of in the same place here. So yeah, strength. I agree. I see it strong. I mean, 0.75 is a strong score. I see it strong as well. So yeah, great. I thought we were going to drop at least a half a point, but I think it may only be a quarter. Let's see. Maybe the VIX is, no, I think the VIX is going to drop actually. Now that I think of it. Okay. Let's go real quickly. We've got to speed up because now I'm yapping again. Let's go to the sectors. Look at that. Financials just smashed its way to the top of the 200-day. So financial strong, communication services strong, technology strong. Those are and there's industrials. Those are our big 4. Love those. Then down here, materials we don't love. Energy we don't love. And discretionary kind of giving it back again. Discretionary is the one that seems to be questionable the most in our major. There's a chance this thing may drop a quarter of a point. We'll see. Anyone drop theirs? I'm curious now. 133. Everything great at the top, as usual. Steven did. Okay. Technology is up. Financials. I mean, everything's good. Industrials is there. Healthcare's sinking a little. Oh, yeah. We'll see if it can hold up. Here it is. I mean, it's very bullish still, but yeah, what do we have? I have an energy made a surge into the upper group. Discretionary fell out. I agree. I got to take it. I got to drop it. I got to drop it a quarter of a point. This is one that's hard. Like whenever we do our like posture check-ins on Wednesdays and Fridays, it's hard. We can't really assess this. Noting the pivot of materials, industrials, healthcare, energy. Yeah, a lot, right? So discretionary took a pretty good hit. We've got energy and materials surging. Now, staples is very stable. Utilities has surged a little, but it was in the dumpster for a little bit there. So, no, I don't see defensiveness. I see inflationary concerns, which are easing some of the growth, but it's not concerning. It's concerns that prevent it from scoring the highest it can. That's what I'm saying. Nice, Press. I love that. Great observation. He said, I'm starting to appreciate the meaning of discretionary in this part of our right. Love it. Love it. Love it. Okay. So let's score it. Dropping it. Oh, there we go. But I think we'll still stay a 6. I think we'll still say a 6. Okay. What did we have? We had a higher low, and that is going to drop it a quarter of a point. Boom, there to there. Minus 0.25 for that. Here's the thing. We were close, but I ended up not calling that a lower high. It came up enough that I didn't give that a lower high. If you did give that a lower high, we actually said we were going to give it plus 0.25. But this opened at 1554. This opened at 1551. I mean, they're basically identical. This went up to 1612. This went up to 1604. Basically identical. So we already scored this lower high. So in order to score another one and give it another quarter point, the next high, which would have been this one, that had to be lower, but it wasn't lower, it was same. So I didn't give it a quarter. But down here, you do see there's a bit of this. We had the same kind of thing back here. It's a funky quality. I acknowledge that. It's a funky quality because we yeah, looking at the bottom moving up, that's escalation, right? Those are higher lows, and that's what's causing me to drop it a quarter of a point. It almost, if that last move on Monday, if this one back here was a lower high, I would actually give it a quarter, then a quarter back, and it would have stayed the same, but it didn't, so I'm not. Yeah, there's a weird, pervasive mini escalation. I'm not going to call it escalation because we're not even to 18. We're still in the teens, but it's also not like coming back down either. So it's like, what's going on here? We need that to shake out. So for me, that's what I'm going to be. Is a 1. Bam. Final score 6. Little worse than I thought, actually, as far as pulling back, but I am never concerned in 6. If we were to drop from a 6 to a 5, then I'd be like, oh shit. Right? Yeah. Right now I'm thinking there's setups. This is a pullback. My basic philosophy in markets is to find a bull market, check, and buy the dips. Okay. Watching the dips now. Right? Let's go see those dips. Let's get our watch list, and then we'll see about searching and this week's. Real quickly. How much time do I have? All right, I did pretty good. I have time. I'll still probably go a little over because I always do. It's just a habit. I'm sorry. Fed watch. This is Fed week. What is the probability? 98 to 2. There will be no surprise is basically the consensus. And you can even see how it's shifted. Right? You can come down here and see the shift. So we'll watch that as well. Here's May. May is now almost, if you look a month ago, there was still people saying, 3 to 1. And then it's just been dropping steadily since. So 93% say no, 6% think, oh, there's maybe a chance. 6% probability in May. June is barely hanging on, right? We're barely better than 1 to 1. And if you look a month ago, it was better than 2 to 1, 55 to 24, with a 20% chance, almost 1 to 1, that we would get a 50 basis points by that point. Now there's hardly any expectation of 50, but we do still have slightly ahead probability here. And then July is the first time that we really see this kind of a, okay. But even in July, there's still people think, no, it might not happen. So, okay. And economic news. This next week, what do we have? Home builder confidence index, no expectation, not a big report. housing starts, building permits, nothing there. This is the big one, obviously. Wednesday, interest rate decision and the press conference. That's what we'll be watching. Thursday, regular jobless claims. There's really nothing else coming out. None on Friday. It's all about the Fed. So if the Fed gives us some verbiage that we think, hey, look, they're going to keep watching it, but you know, they want, the market wants to be assured that there will be rate cuts in 2024. As that happens, I think things will be fine because we've got a lot of strength. Market's strong. A lot of strong fundamental characteristics of this current market. Corporate, everything else. So yeah, I feel pretty good about that. Okay, watch list. Apple is still kind of a dog. We're still waiting to see. We really need this thing to kind of get up into this well above 175, right? We need to break, maybe not all the way to 180, but pretty close. And then we can start. Everything that's happening right now is in spite of Apple. The NASDAQ has moved. Technology has moved in spite of Apple. Apple's really been kind of anchoring things, weighing things down. AIG looks great. Still moving, still going. AMD, it's on the setup list. That looks fantastic for a setup. It's about to find just made a new high, right? Just made a new high. Now it's finding a higher low at old highs. The old resistance becoming new support above the 50. This is definitely setting up when we're watching this next week. And Amazon, a little bit sideways. We'll keep our eye on it. AXP, I think AXP looks good. It's a great financial company. It's pulling back. Waiting for this pullback to finish. I would be fine with this thing pulling all the way back here towards like almost 210. Still above the 50. AXP is on the list. Boeing is a dog. We consider it a dog, but there's nothing interesting about it. We watch it to inform ourselves, not because we're thinking we're going to trade it. BLDR, put it on the list. It's on the short list. This looks great. Trend is strong. We just made new highs. It's pulling back. We're looking to see when this thing, it gave a little bit of a false start right here, kind of just like a real fast whipsaw. And now it's like, oh, wait, it's all the same consolidation then still. I'm still watching it. Citigroup on the list had a strong day. Buyers like came back in. I still think there may be some consolidation. I've been trading this for a while now, looking for the next trade, of course. Caterpillar gave a signal back here on Wednesday of last week. Still going. Anybody in it? Let me know. Woof. Capital One. It's kind of sideways. I don't know. I'm not feeling it. Maybe it's going to hold the 50. ConocoPhillips, you can see oil had the breakout. Costco, a little bit of a false start, right? Failed the launch. This is a tough one because for me, this was too big of a drop, right? So what would have to happen right now? This would have to pull back and not get back here. If this thing could do that, it's a maybe. So if something like that happens, it's a maybe. That's a maybe for me right there. Yeah, it hasn't dropped like that in a while, right? In quite a while. So we'll see if the sellers are done or not. Crowd, I actually still like CrowdStrike. I really want it to kind of like somewhere in this area above the 50. I would still consider it viable. So like, let's say my zone looks like this. If it can stabilize, let's say, and then like pop up out of this, and this thing come down here and turns, I would still be, my curiosity is peaked still. CSX, as long as it holds the 50 and turns, I would say still on the list. Delta, not yet, but maybe this week it pulls back. Same with this. This could be a maybe. Home builders. The Dow's a little more sideways. Ford tried, failed. If you tried it, you got out of it. If you got in early enough, you probably had a very minimal loss. Could you still be in it? I would actually argue, like, yeah, it's still kind of holding the same support. I never like these tweezer hold type engulfings. So Fastenal, I have it on the list, but it's kind of funky right now. GBTC, if you like Bitcoin, it's pulling back, setting up. Still momentum there. GE, same thing. Gold pulling back. Gold had a big, I don't know what broke gold out like that. I don't know at all. Google. I've got Google on my list. Google did enough. Google was also down the way that Apple was down, but it V'd. There's the V. Bam. Now, as long as I have a higher low, anywhere in there is viable for me to say, yep, I like it. It doesn't have to be above the 50 when I trade it. Yeah, it broke the 50. That was great for it. It doesn't have to be above the 50 when I make the trade. So consider like this, and then finally it held on top of the 50. Those first two were good trades already. So, right, it comes off of that breakout. So same kind of a thing here. Because it's a strong, honestly, it's not just because this one's a strong stock. It's because it went through the reversal pattern, even though the reversal pattern next support level didn't happen to come above the 50. I still consider the buyers to have regained control. So you can see back here, there was 2 instances where it didn't quite hold the 50, but still gave good trades to the upside, right? Then the third instance, it did hold. And then it held again above the 50. So then it gave 2 more trades above the 50. I want all of those. I want all 4. If this thing's going to give us 4 trades, I want all 4 trades. So as soon as I'm convinced that the buyers have regained control, I'm ready to go ahead and have a go. Home Depot. Ooh, Home Depot failed. We'll see what happens there. I put IBM on my list. I'm watching that one. Intel's on my list. I'm watching that one. It's a higher low. Not by much, but it is. IWM on my list. That looks strong. I think small caps look strong. Yeah, Home Depot rolled that sucker. I closed it. And I said, you tricked me, Home Depot. I didn't really. Anyway, it's neither here nor there. Meta looks good. Put it on the list. We've got a great list. 20 stocks on the short list. I mean, it's things look strong. Microsoft on the list just popped out to a new high. If this thing pulls back and makes a higher low, I'm in it. In it to win it. Netflix looks strong. Nope. Netflix looks okay. Nvidia looks strong. Magnificent. This stock is magnificent. Does it have more to go? We'll see. Sellers haven't done much yet. Picard. I like Picard, but it's kind of overextended, not really on the list. I'll tell you what, some of these industrials that we found have just been phenomenal. PLTR. It's starting to become less of a pullback and more of a sell-off. But there's no volume, so I'm still going to consider it viable. I won't if it breaks this low and the 50. So this is a little bit deep. The only saving grace, no volume, right? Qs look strong and fine to me, still trending up. Ross Stores, a little bit of a failure there. I'm going to drop it. Why? Because it's consumer discretionary. So you can see what happened. Home Depot tried it, consumer discretionary, out. Ross Stores tried it, consumer discretionary, out. SMCI, pulling back. Put it on the list. SPY, I still think the SPY is bullish. Costco as well, right? Press, you got it. TPR, same thing. Consumer discretionary. It tried, just the whole group got sucked right here. So I'm less inclined towards any of those right now because yeah, we know that that group right now is kind of the tag along. It's not firmly rooted in the growth areas the way the other four are, right? Tries and then falls behind, tries and then falls behind. Taiwan Semiconductor on the list looks strong. UNP, UNP, I'm kicking off the list. I had the line drawn, but I did not take this trade. I was very close, and then it just sort of dropped. And now that it's broke the 50, and we have as many strong industrial stocks as we do, doesn't make any sense to keep watching it. So it's off. There's the VIX. Waste management. Waste management could be pulling back again. Walmart pulling back. Both very strong. XBI. What do you think? Do you think it's industrials or financials that we need to search? I'm going to let you guys pick. Put your votes in. Here's a concern. It's industrials or it's financials. And I've got one vote for financials already. Two for financial. Energy is surging and we don't love that. I don't know why energy's on a surge. It sucks. It's going to make gas prices higher. It's going to put stress on prices. We'd really like to see this come back down, right? At this point, I see a cup. I'd love to see it fail to make a completed handle and revert back towards 80. Oil reserves lower than expected was the news. Got it. Energy and gold should be what we are trading right now. Don't resist. Hey, I'm here for it, press. They both, I'm not anti. I'm anti oil and gold's influence on prices. But I agree with you. If oil and gold have a consolidation and that's where the bullishness is, we trade where the bullish is. 100%. 100%. But industrials are still strong. Technology's eased a little, but still strong. Staples have strength. There's a lot of strength across the board. Oh, even, I don't know. As I look, I don't love the way that the utilities and staples are definitely looking strong. The good news is so are industrials and financials. Yeah, look, if other things are going to move into favor, let's be ready to trade those things when they're in that favor. Okay, trading plan. We're halfway through. We're now working on section 4, risk management. You need to make sure that have defined your portfolio heat. You know how much trade risk you're going to take on any given trade. You know how many trades you're going to have on at any given time. You know how you're going to adjust if the market gets better. Is it more trades, more risk per trade, or both? If the market gets worse, is it less trades, less risk per trade, or both? How are you going to make those adjustments? Right? Make sure you have a fully defined correlation to your market posture. Make sure you have tsunami indicators that help you to hedge when you need to. Mine is the VIX. And make sure that you have considered and started to define what would make you take a break. Would it be a percent drawdown? Would it be a certain number of losing trades in a row? Or, and the third one is the one that always does it for me, do I just simply recognize I'm not in my flow? Right? I'm impatient or I'm frustrated or something where I'm like, okay, you've got to take a break. You've got to reset. That is what we're working on this week for the trading plan. Make sure you give me that hour, 1 hour. That's it. Either 3 20-minute days, 2 30-minute days, or 1 60-minute day. Completely dedicated only to trading plan development. Okay, lastly, let's run a quick search because I've got 3 minutes. 3 minutes. I said I would do it and I'm going to accomplish it. I said I might go over. I'll accomplish that as well. The search is fairly well set up. the final verdict was financials. Press is saying I should have more energy or gold stocks. I don't think I need those stocks though. I think right now with them being auxiliaries, you can have a couple, right? You have a couple of XOM, COP. I like GLD for gold, but if you wanted it, you could to trade one, you could trade something like GDXJ. GDX is the gold miner ETF. You could pick an individual gold mining stock, but I think you're better off. Maybe we'll do energy. I mean, look at these financials. Bitcoin is no Coinbase. I mean, Robinhood's doing well. But we need to get rid of ETFs. Stocks only. Stocks only. Deutsche Bank is strong. Yeah, look at some of these. ING. I'm gonna go through this in a little more detail. And I will show you my list tomorrow. I know, right? Press, I don't want to influence that. I was just thinking, you know what? This is a great exercise. Now, here's what I would recommend that you do. I would recommend you go one at a time and you start at asset management. The easiest way to choose is to come one group and say, what's the best one or two? Where you're like, ooh, look at this CG. Popped up, new high, pulling back, something like this, an OWL or APO, right? And pick two. Then go to the next one. Banks diversified. What do we have for banks? Okay, right? And we have Citigroup. We've watched Wells Fargo before. They're screaming again. So I think with a group this size being strong, there's nothing wrong with having 12 to 15. And so if you go through these groups, you can see that's two groups. And we already have, if we pick two from each one, we're already at 4, right? We're already at 4. Some of them may not have, but I would pick 2 from here. That's 6. I would pick at least 1, maybe 2 from here, probably 1 from here, 7. I think you could end up with a good number as you go through this. So that's the exercise. Remember that this is, I'm going to go back to any, and I'm just going to send this I'm going to send to everyone. This is ready to go, ready for you to run a search and pick some stocks. All you got to do is advance this. I'm going to come up with my list, and when we're done, let's see how we did. How many overlap, what looks good. So that's the assignment for today, to give you some practice with your searching, is to come up with your list, what should be your current list of financials that are representing the group, representing the sector rather, on your watch list. Tomorrow we will meet at 9:15 a.m. Eastern. Tuesday we have 8:30 p.m. Eastern. Options Foundations continues. We are doing a selling options working session. Application will be working in the platform, working in the model. So if you want to come for that, alerts are starting this week. The approval, I was told, came through for the SMS text. So we're going to get that set up. And I'm hoping over the next week, we're moving into a setup where everything moves to Discord. And we will not use Zoom. We will just do Discord. I'm not sure how long it's going to take me to get that set up, but Stephen, that's going to force everyone on the platform, and then hopefully we see more community development. I'm going to build some specific rooms. We're going to set up events and times for you to interact with other instructors like me, Glenn, and Gary, to interact with each other and really start to get use from that platform, because there's a lot of good stuff in there. All right. It's good to see everybody. You know your work ahead. Let's get it done. I'll see you tomorrow. Enjoy the rest of your Sunday. As always, happy trading.